Well, here we are, 2 short years after the end of the Great Recession. The world economy now finds itself yet again in a very dangerous place. Economic growth is literally petering out in all the major advanced economies, and this is despite the massive amounts of monetary and fiscal policy that has been poured into the system over the last 2 or 3 years. Indeed, as we speak, recessionary forces are beginning to intensify, particularly in Europe. And talking about Europe, of course, they're engulfed in this debt crisis, which, by the way, is not only not only an issue for Europe, but is an issue for every single industrial country, as you will see in a few minutes. The trouble is, with all of this volatility going around, financial markets are being whipsawed quite dramatically. And it's not only investors that are fearful, it is also the general public. People are really fearful. They are worried. They don't know what the future holds for them. Are we facing another recession? Or could we be facing the first global meltdown or the first global depression of the 21st century, akin to what happened in the 1930s? Only history will tell which of these events will take place. But it seems to me that given all this tremendous uncertainty, we need to take stock of where the world economy is at the moment. And as you can see, I mean, in the United States and Canada, so far, recessionary fears have been put on hold. There was a worry just a few weeks ago that the US might be entering into a double-dip recession, and Canada would also follow into a double-dip recession. But fortunately, so far at least, economic growth has continued to eke out, at least in a positive sense. And when you take a look at the Americans, the United States economy has now grown for 9 consecutive quarters since the end of the Great Recession, but the last 2 or 3 quarters, growth has been very anemic, and they are stuck with a very high unemployment rate. The measured rate is 9%, as you know, but if you add in all the people who want a full-time job but can't get a full-time job, and all the discouraged workers in the United States, you're looking at an unemployment rate of 16 or even closer to 17%. We're getting close to Great Depression levels here. And when you take a look at Canada's economy, so far things have been trucking along quite well. But even in our case, in the second quarter of this year, our economy actually shrank. GDP declined. And of course, fortunately now, the new numbers coming out show that the Canadian economy is beginning to pick up, and in the third quarter it should show that there are some, GDP should be positive. But remember, just last week, when the unemployment or when the job numbers were released by Statistics Canada, it showed that Canada lost a whopping 75,000 jobs in the month of October. For a country the size of Canada, that is a huge job loss, and that again is why I come back and I say to you, things are on hold at the moment, and we have to see how Europe plays out. The recovery in Europe is clearly grinding to a halt. And in fact, the latest forecast by the European Commission, they expect, at best, Europe as a whole will grow by 0.5% next year. Now, when you take a look at Japan, what's interesting here, Japan was actually the first G7 country to indeed enter into a double-dip recession. Partly was because of the horrific tsunami and the earthquake that Japan was buffeted with, but nevertheless, their economy shrank for 3 consecutive quarters, and the numbers that came out just a couple of days ago show that in the third quarter of this year, the Japanese economy bounced back and grew, I think, by about 3 or 4%. But remember, that growth is because of the construction rebuilding, because of the earthquake. Now, Japan faces some very serious problems. Its most serious problem is that the Japanese yen has been soaring, and it's now at virtually record highs. This, of course, is hitting their export industry quite significantly, and it seems to me, unless there magically is a revival, particularly in Europe and in North America, and we get back to much more robust growth, Japan will pay the price. When you take a quick look at emerging markets, the good news here is that they continue to expand, and although their worry is inflation, unlike ours, the Chinese and Indians particularly have been very concerned about the buildup of inflationary pressures in their economy. They've been raising interest rates, tightening monetary policy, and raising the reserve requirements in order to cool their economies down. And it's beginning to work, but it's going to take quite a bit longer before we see an end to that episode. I wanted to share this with you to see where does the global economy stand today compared to what it was in 2007 before we had that, the great crash and the financial crisis. Well, here, as you can see, for the G7 economies, there are 4 of the G7 economies that have actually recaptured and regained all the GDP or the output that these economies lost. Canada's case, Canada today is about 3% larger than what it was in 2007. The second one is Germany, is approximately 2% bigger today than what it was in 2007. And the United States has finally got back to its pre-crisis levels, and France, we think, will also get back to the levels that it was in 2007. But take a look at Britain, Japan, and Italy. These economies of the G7 are still way below in terms of production of goods and services where they were in 2007. And in the case of Italy, and in fact all of those 3 countries, unless growth picks up, and I may be wrong and I do hope it picks up, but I somehow doubt it. It seems to me that they're going to be in that position. It's going to take them a good few more years before they get back to where they were in 2007. And that's where people talk about the lost decade, and they may be heading in that direction. Now, when you take a look at the pigs, an unfortunate moniker, but look at their economies, Greece, Ireland, Portugal, and Spain, they're all shrinking, particularly Greece and Ireland. They're approximately 10% smaller today than what they were in 2007. And when you take a look at the BRICS, what a huge difference we're seeing there. In China's economy has been barreling along, and today China is 45% bigger than what it was in 2007. The same thing with India. It's a third larger today in terms of its production than it was back in 2007. And again, with Brazil and Russia, their economies are also now larger than what they were back in 2007. It seems to me that there's a dramatic change taking place in the world economy. There's literally a recalibration that's going on in the world economy, but at a very, very rapid pace. And the industrial advanced economies are no longer the key players in the global economy, and watch for China in particular. I think you can already see that China is moving on the world stage with full confidence, and the Chinese are also increasingly becoming much more assertive on the geopolitical front. China knows that it's just a matter of time before they emerge as the world's #1 economy. Now, of course, that's not going to be in a straight line. There will be bump and grind, but I think most observers would agree that China is going to be the #1 economy in a few short years. Let me switch gears and talk about the government debt, which today really is the new subprime problem that the world economy is facing. Remember, the subprime came about because of the meltdown of the US housing market. When the bubble blew there, it then led to the collapse of the subprime mortgage market, which then, of course, infected banks not only in the United States but around the world, because remember, the ratings agencies had given a lot of these subprime products AAA ratings, and of course that ended up dragging down other banks. We ended up then with the credit crunch, and that of course led to the Great Recession. Today we're faced with government debt, as I say, which is the new subprime. Look at this particular slide.